bring in Markus Helsing now of Alpha Broking. He's in our Melbourne studio. Markus, great to have your company on. Pretty exciting day for oil, given what happened overnight at that informal OPEC meeting. You surprised?
Well, no, I mean, look, it is exciting. I mean, look, essentially any commodity move excites us every now and then. No, but look, I mean, their job really was to, first and foremost, try to stabilise the situation that sort of developed 1.5 years with the massive sell-off that we had. And I think that's now in full swing, and probably after November we'll basically feel the market will have some base built in, let's call it $40 or whatever the base is. And really, I think that's a production cut we're talking about now, which has long-term price benefits, you'd think. On the other hand, obviously, the storage capacity out there is enormous, and that still has to take time for that to run down to a level that it actually has a positive price effect. But generally, it's a strong positive, and yeah, we were expecting that, but it was probably about time, and we expect a lot more after November.
Yeah, it's Adam here from Shaw and Partners. Obviously, we've seen a lot of scepticism in the market about this OPEC deal, and there wasn't a lot of detail in that announcement. Did you sort of glean anything else, or can you see anything else that might happen?
No, I mean, as we all know, I mean, OPEC's power in itself is somewhat diminished. We all know that at above $60–65 a barrel, the fracking will get into full swing again. And of course, needless to say, the discipline of OPEC members is highly questionable. So, I mean, look, generally, I think I'm very happy about the fact that they're starting to take charge to ultimately gain price control again over a period over the next 12 to 18 months. And that's really what this exercise is about, in my view.
I mean, obviously, it's good news that OPEC's come to an agreement. It's been hard enough to get those members to agree. But what about non-OPEC members? Because I think they've said that they won't be even sort of reaching out to them for cooperation until production targets are actually reached. So a lot later in the year.
Yeah, well, look, I mean, exactly. I mean, look, I just think if you look at certain stocks, look at Woodside, for example. We find Woodside a tremendous good stock to look at when you look at the broad petroleum-type industry. And that's a market that has been in a multi-year bear market. Technically, it's found a base, which is like the stock. And if you look at stocks like Royal Dutch, they had already a pretty good rally earlier this year, which we sort of a part of. We're looking at Royal Dutch again as a sort of diversification on the international scale, and we probably look into that as early as tonight. The likes of Santos and Oil Search we like in a moment. We went long Oil Search, but I mean, Santos is a spec stock that investors should be careful about because of their net debt situation, but it's a stock nevertheless that can perform if the good news keeps rolling.
All right, let's move on from oil for the time being and talk gold and silver. I know these are ones you've been watching. You've been particularly bullish, one of the most bullish on our programs on where gold's heading. Now that you've seen that presidential debate, maybe Clinton's looking like perhaps she's inching ahead of Trump. Does that make you feel differently on gold?
Not at all. I think what's happening with the US dollar on the one hand and what's happening in the world Western banking system to me is a lot more concerning. It has a lot more of an effect on investors diversifying into gold. I mean, what's happening with Deutsche Bank is really just the tip of the iceberg. You can go from Japan, you can basically go through the whole Northern Hemisphere and you hardly find any bank that has actually any decent health attached to it, or in the previous more conservative type of views. Look, generally we think the US dollar is the big beast, and we believe the US dollar is topping out over the last 1.5 years, and we still believe in this sort of phase the US dollar has a fair chance to fall 10% on the basket. And when we go more domestically, I think the Aussie dollar will have probably a target of 85 to 88 cents attached to it as early as the next 6 months. We're very bullish on the Aussie dollar. Now, when you look at all that perspective and they look at something like gold or silver or whatever, essentially that are safe haven investments on the one hand, but obviously they get also lifted if you see general lifts in industrial commodities such as copper, for example, that's seen a bit of a renaissance in its prices, gently but nevertheless positive, and of course oil and gas. And we really believe, also if you look at a BHP stock, I mean that's now actually a stock that's in a medium-term bull market. I wouldn't have never thought I'm going to say that 6 months ago, but that's where we're at. So there's generally a lift happening, and we believe the technical picture also in many of these commodities, gold in particular, look very bullish to us in the big picture. We feel that gold in the moment, when people look back in 5 years' time, they will just kick themselves of not having bought a lot more of physical gold and gold stocks at these levels.
Markus, Jeremy Hook, TMS. Are you bullish bulks as well, coal and iron ore? It's the basket of everything which would make up that currency move to 85.
Look, I think the bulk commodities, you're right, but I think the terms of trade is a big component, of course, to help lift the Aussie dollar up there, because in all other components like inflation, interest, etc., we're already on a positive, supportive side for the Aussie. But I think it will be enough for iron ore to just stay where it is, to be honest, and I think that probably will be happening. Coal will get a lift somewhat with general oil price rise, and all of a sudden, from a negative in terms of trade influence on the Aussie dollar, will actually have a positive. It might not be a rally to the sky, but we think it's due for a break of 77. It tried to break it now for 6 months, and the break of 77.5 on a weekly monthly close for us is a major buy on the Aussie dollar for a rally up to 85, 88 cents.
Okay, so what's your time frame for that again? You say by next year?
3 to 6 months.
3 to 6 months. Wow, Jeremy, what do you think of that? 3 to 6 months to get to 85 US cents.
Well, I mean, it could happen on the momentum there. I do think it'll need a lift in the bulks to do that. I don't think base metals or energy alone will do that. And I think it's quite possible that we could see a $65 a tonne iron ore price, at least over that period. So, yes, in that environment, 85 is possible.
Yeah, I think technically, obviously, the Aussie dollar failed a couple of attempts to get over that 77, so it actually looks like it wants to go higher, albeit RBA is trying to do a different, and everybody else is trying to sort of talk it down. It does want to go higher, so technically I think it does look like it could start to break out. When you
look at iron ore, Markus, and I'm not sure if you look at iron ore in detail, but certainly it does look like there's a lot of supply coming online over the next 6 to 12 months. Even the miners themselves, the major miners themselves, don't see the iron ore price holding up at levels it is now. What's your take?
Well, as you know, I'm not a specialist in iron ore, that's for sure, but I do look at pricing, and the forward pricing remains a $13 backwardation on a spot-to-spot, October 16 to 17. That hasn't really moved at all over many, many months. Now, a backwardation does tell you that the forward pricing just does not buy any iron ore price that's going to run away to the sky in any shape or form. Sure, it can bounce around between 50 and 60, might even spike to 62 or 65 short term. But the backwardation tells you this will not be sustainable. So essentially, to us, it's a market that will drift sideways within a $10 range.
All right, Markus Helsing, we'll leave it there with you today, but we really appreciate your time as always. Thank you.
Thank you, Ingrid.